You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
Welcome back to our continuing series of coverage from the 2024 Options Industry Conference. It's a great time of year. We get a chance to catch up with a wide variety of viewpoints and perspectives from the world of options and discuss the hot topics that are top of mind for you, the listener out there. And next up in the hot seat is a newcomer to the network, Patrick Zielinski, the CEO of Box Options Market. Patrick, welcome to the Options Insider Radio Network.
Mark, thanks for having me. I've been a huge fan for all these years. It's a pleasure to be here.
You're the one guy who listens every week. Now I know. I should thank you. But no, we're having a fun time here at the conference. I'm a little loopy to start things off here. I haven't had much of my caffeine yet. But it's a fun time here at the conference. And before we get into, we have a lot of hot topics I want to discuss. I want to get into right off the top because it doesn't seem in my mind to be possible that we are discussing this anniversary, but we are. We're here right now, Patrick, discussing the 20th anniversary of the launch of the Boston Options Exchange, which again, I remember when you guys launched, it doesn't seem, it was before this thing existed, before Options Insider existed. So yes, it was back in the primordial ooze days of options. It was interesting at the time. As I recall, there have been many exchanges that have launched since. To my recollection, you guys are really the last one that kind of came to the party bringing something new. We always welcome people who bring something new, some new innovation, some new way to trade or price or execute options. And you guys came out with what would later be adopted by the entire market, penny pricing, and of course the penny auctions. It really kicked off a firestorm in the world of options. So let's start there. Can you believe it? I don't know, maybe you can, Patrick, but 20 years, it doesn't seem like it's been that long to me.
Well, time flies, and I was actually there on day one, actually prior to launch. So just to be with Box through launch, since inception through present day, it's been quite the journey. I'm really thankful for having the opportunity to sit in the seat and talk about Box and help it grow. But yeah, if I reflect on where the industry was back in 2004, it was a different space completely, right? I mean, you had everything was floor-based. IAC was out there for a year and a half, fully electronic, and then Box was the second fully electronic. And as you say, Box has a history of being innovative, and so we introduced the price improvement auction. Back then, the trading increments were nickels and dimes, right? So being able to trade in more precise increments and deliver that price improvement to the retail investors it's millions and hundreds of millions of dollars that have been, saved in creating a better customer experience. And like you said, it's been adopted. It's more or less a utility now, but nonetheless, it's an extremely critical part of the industry. When you look at the current retail execution experience, there's no time's been better, right? In terms of receiving price improvement and just the access to the markets basically from their phone is just it's an amazing progression from where we were in 2004 to where to even place an order online, it would take a while to get the confirmations, and now just where we are in the industry and being able to trade electronically seamlessly it's incredible.
Yeah, that's a good point. ISE was only not even 2 years old. So the electronic options market really was still nascent. That will come as a surprise to a lot of our, especially newer listeners.
I think the industry was like, 4 million contracts back then, and now we're trading at 45 million clip, which is it's very impressive growth.
You can probably count the number of exchanges on one hand. It was a different time in the world of options. You guys also have a pride of place in that. I don't believe he was your CEO at the time. He was about to become your CEO. Tony McCormick was actually our very first guest on the very first episode we ever did of what was Options Insider Radio at the time, before it became the full network and the extravaganza that it has grown into today. When I was still mostly a trader trying my hat at this whole radio thing, he took time out of his schedule to come with me. No one even knew what a podcast was back then. This was pre-iPhone, pre-iTunes.
Tony's a busy guy.
You had to have an RSS reader to get it, but he did take time out of his schedule to chat with me for quite some time. So we'll always be thankful for that. Always have fond memories of Box as a result. But 20 years, again, it's hard to believe. But I guess time flies when you're slinging options out there, which everybody is doing these days. Speaking of everybody, we did poll our audience before we came down here. And we said, we're going to the options conference. It's our annual kind of gathering. We get to talk with everybody about all the hot topics in the world of options. What are top of mind for you? What are top of mind do you think we should really focus on at the show? And they came up overwhelmingly with two topics that they wanted us to discuss this week. Take a guess, Patrick. What do you think those two issues were?
0 day.
You've been around this space for a little bit. Yes, 0 day. That was number one. It was number one by a country mile at first, by about 75%. Then another issue started catching up to it, and they're both kind of neck and neck right now in the pollings. Take a guess what the other one is.
I mean, there's a close second, maybe Flex or...
I don't know if Flex has that level of penetration yet. Maybe someday. That'd be an interesting options market. If Flex had that degree of penetration, then that would be something. No, it's the whole brouhaha over 24-hour trading. That's the other thing that everyone really wants to talk about. So we'll start there. It's been a while since, with those two issues, of course, it's been a while since we've had a chance to chat with you Box folks. And speaking of anniversaries, we are just a week or two past the 2-year anniversary of this whole kickoff of this whole whatever you want to call it, zero DTE revolution. I know before you get excited, they're short-dated option. I get that, but I think the genie's out of the bottle at that point. There's zero DTE options for the lion's share of the audience out there. These are not universally embraced products, even by our audience. Our audience very hardcore in the weeds for options, and they're still split on whether they want to adopt these or not. So it's fair to say when we talk to people at an industry conference like this, there are some that are still also a little reticent about these products. We only have jokingly referred to them as gamma bombs sometimes on the network because they're lurking out there, maybe waiting to go off. So let's start there. Where do you and where do Box fall on the whole 0-day phenomenon? I think this is a great development for the options markets. Are they, like we say, gamma bombs lurking out there? Where do you fall on this?
Well, I mean, there's no doubt that the volume trends are there. I mean, there's definitely been a significant increase in activity. It's lifted volumes. But beyond that, I think it's just these additional expirations have just really unlocked some of these strategies, right? So you're more accurate, there's the ability using these options to more accurately hedge and construct your portfolio in certain ways, whether it's generating income or having directional moves intraday to hedge around certain events. So that's kind of our observation, is that we see a balanced mixture of a lot of these trades that were coming in, even on the retail side, seem to be like defined strategies, meaning like they're doing spreads, right? So for basically very little premium, they're able to express their viewpoint of a market. And by the way, there's many different viewpoints, right? So because of that, you have all this blend and mixture of activity that creates a balanced framework. So it's kind of some of the observations that we see, and it's been interesting to watch the growth there.
We do have a lot of institutional players in our audience as well. Not as enough to drive Flex to the top of our poll, maybe next year.
Well,
but
it's only because we're launching Flex hopefully the next month or so. So I had to.
We'll get to all the Flex fun in a bit. 'Cause there is some Flex fun going on, which is it's interesting. But a lot of the pro listeners in our audience are also maybe a little bit leery about zero DTE, and they had some questions they wanted us to put to you about. In your view, how do you think this flow? Because I mean, half of SPX going up 0-day. That's not all mom and pop. That's institutions out there as well, right? So, in your view, how has this impacted the institutional landscape? How are they utilizing these? Has it changed the way they are setting up their trades now in light of this new product offering?
I don't know. I just look back like 6 years ago, and like there's Morningstar data that suggests that the assets under management for some of these funds that are derivative based, whether they're generating income or have a carry neutral strategy and manage tails, there's no doubt that there's been growth there. I mean, but what's different 6 years ago, like rates were very low. So you had these like strategies that everyone was trying to basically find yield. So now that rates are higher, and they're still deploying these strategies as an overall, maybe they're not investing completely. All these institutions are just having a portion into these carry neutral kind of strategies. So, it's just another diversification of their overall portfolios, and they've been relatively successful.
The other question we receive, obviously a lot on the 0-day front, is everyone likes the index, but they want more. They want their Teslas, their Apples, their Nvidias. We've heard a lot of interesting viewpoints in this room so far this week about why we're not seeing those already, and B, when or if we will see those in terms of time frame down the road. So I'm curious from your perspective, what is the biggest impediment in your view to having the Tesla and Nvidia 0-day options, for lack of a better term?
I think it's just the phenomenon of what happens after the close, right? There could be an event and you can exercise or not. So the average retail investor might not know, the capabilities of how the assignments work, right? So, they can go into the market at 4 o'clock and all of a sudden there's an event, they can quickly swing into money to out of money. And, it could be a situation to where like they have to deliver stock and they might not even have the stock or know what to do in that scenario. So I think we have to be cautious with how to manage that, right? The last thing we want to do is just, expand these expirations, these shorter tenures, and then there's a bad experience, and then we kind of lose the forward progress we've made with growing the pie, right? So we just have to have a cautious and deliberate approach to this, whether it's a pilot program or it's further education, or just enhancing systems to be able to support what happens after the close.
So I've heard some people talk about a pilot. I've heard some people say we need to get rid of contra exercise orders for everybody, which is not super popular with a lot of the market makers out there. Or like you mentioned, some sort of limited time pilot, whether it's during earnings season or maybe outside of earnings season, or it's by volume, only the top 10 names. So what format do you think that should take?
Yeah, I think definitely a pilot, and wrap some criteria around that, obviously, and work from there. But just having a slow, measured, and deliberate rollout would make sense.
So slow, by your answer there, it sounds like we're not going to be seeing these anytime soon, is what you're trying to get out there for the listeners there.
Yeah, even from a rulemaking perspective, right? It took quite a while to even get to the 3 listings that are out there. So to add additional names, even if the industry said, okay, let's go full speed ahead, I think we still have a regulatory component that is essential and critical. So that could be, there's been filings that have been out there for quite a while, over 9 months. So
we had a guest from the exchange world like yourself yesterday come on and say he thinks it'll be months, not years, that we'll see some sort of pilot or something like this for these. Do you agree with that timeline, or is that wildly optimistic in your view?
I'm not going to wrap a timeline around it just because of knowing how these.
We have to get exact. I want exact day, exact time. December 14th, 12 p.m.
No, I think I'm beyond the 6 month.
Beyond 6 months.
Yeah.
And the other question we're receiving, since we're talking about things being approved as well, getting away from the 0-day for a second, another question. A lot of write-ins on this poll. By the way, right now it's staying at about 44% for 0-day options, 37.5% for 24 hours. We'll get there in a second. 12.5% for the volume surge, and about 7% for other, including a lot of you writing in. For the Bitcoin options, I've heard on the ETFs, I've heard a lot of interesting discussion on these this week. Doesn't sound like they're too close on the radar. But what is your thought on that? You think we'll see these anytime soon?
Yeah. So if you had to say the time, yeah, same situation. I think there's some uniqueness there. Just the way that there's elements that have to be dealt with at the OCC and CFTC. They're really kind of novel products to a certain degree. So I have an extended view on that in terms of timeline.
So it sounds like
so. In other words, for the zero date expiration, it's a matter of like when, not if. With the Bitcoin ETFs, it might be if.
That's
just
unfortunately
to, paint a broad picture there.
Isn't it funny? We're talking about a 20-year anniversary of the box, and we have an environment where the regulators can improve the underlying, but the notion of buying a put on said underlying, that is the bridge too far. That is where they need to.
So hopefully over time, it's something that we can work towards.
Let's hope so, for the sake of our listeners who just pester me with these questions all. I'm just going to forward them to you, Patrick, then you could deal with them. Let's go out here to the other hot topic that everyone's fixated on these days. Very timely right now. The folks at NYSE kind of kicking it off at their poll. SEC also debating this issue as well right now, which is the whole notion of should stocks go 24/7. We've seen a lot of newer entrants to the space recently. Like we see it, for example, we do a crypto derivatives show, and a lot of the people coming to that show are crypto native. They know nothing but the 24/7 crypto market. So for them, looking at the traditional options world and seeing an opening, closing bell, they're like, what kind of an archaic relic is this? So to them, it's mind-blowing that we don't have it already. But obviously, people who've been in the space for a while, there's a little bit of a different viewpoint. Let's start there on the underlying first. Where do you fall on the notion, should we go 24/7 across the board in stocks? And then, of course, what does that mean for options going forward?
Yeah, I think that there is certainly some overseas and APAC demand, especially overnight. You can kind of see that in other products that trade. But to go, full boat across the board, let's just keep the whole thing open 24 hours a day. I'm not certain. Again, I think there's just, especially in the, you have to consider what the liquidity is there, and then the effects of clearing. Like on the equity side, it's kind of like those aren't exactly clearing real time, right? They're batched and then they get submitted, I believe it's like 6 or 7 a.m., right? So you just have trades that are accumulating, you're relying on drop copies. So I think it comes down to, just ensuring that there's appropriate risk management that's accounting for these transactions, right? And then, of course, just having liquidity, during those times, right? To where, you want, tight and efficient markets. And if things are a bit wider, of course, if there's demand, I think the market adjusts to that. And if there's demand, market makers will be there in a meaningful way. But I think that's just, there's considerations also on how these systems and operational processes can, support these extended hours, right? There's implications on CAT and how to relay those messages. And, there's batch processes that happen that are critical to maintaining stability of these systems. So right now, volumes are thin. That's one thing, but if it's extended and there are impacts on workflow and just general system scale at that point.
I'd say about 4 or 5 years ago, I stopped asking these questions at the conference about after-hours options trading. I used to always pester your predecessor, Ed Boyle, but he probably got tired of answering that question all the time. I stopped asking it because it seemed like there was really no interest in it, no evolution on that front. It seemed like a dead topic, so I stopped discussing it. And now here we are 4 or 5 years later, and it's all the rage again. Obviously, with the underlying maybe being in flux, that's going to have some impact on the options market as well. So in your view, if something were to change with the after-hours trading dynamic with options, in your view, what format should that take? Should it go along the lines we were just talking about, the limited pilot, limited top names, or should it be, 24/5, 24/7, free-for-all, have at it?
No, I think there needs to be a measured. I would probably start on something like lower to mid volume, instead of, I think you just want to prove that the infrastructure can.
So not even your Apples and your Teslas, you're going more mid-tier.
I mean, that's just kind of, that's one way to do it. But who's to say, there's events that happen overnight. I think, there is use case to have these trading periods as well. But another question is does that just take the demand off of the traditional opening bell, right? It could just smooth things out to where, it could be the same volume, but just extended through, the additional hours. So I think it's we have to be careful we're not just cannibalizing
So you think you're adding more risk for not much benefit at the end of the day. And speaking of volume, that's another trend that we've been talking about for a while here on this show. Certainly post-pandemic, the entire industry has been, just almost exponential from a volume perspective. We see it anecdotally here, of course, on our network with our number of listeners growing. And it's been fascinating to see. The conversation has been forever, can this continue? Can this continue month after month, year after year? The answer has been yes. I faded it early on. I was like you in the early days of options. We didn't do this much volume. This is an aberration. Everyone's at home. They're going to go back to work, and trading won't be the only sport in the country anymore. And then I was proven wrong, and I said, okay, I'm not going to fade this anymore. And we've been rallying for years ever since. Last March was the first kind of down month we've seen in quite some time. Obviously, it's not exactly comparing apples to apples because last March a year ago was, the contagion fears. That was kind of a bit of an anomaly month, but still down somewhere around 10%. So from your view, what are you seeing in terms of volume trends over there at Box? And do you think this is maybe a sign of plateauing, or is this maybe just taking a breath before the next leg up, Patrick?
Yeah, obviously volumes are still they're hanging in there. They're very strong and healthy. I think we're up actually 7%. This year to date versus last year. But if you measure Q1, 23 versus 24, I think it's off by 2%, right? So volumes are still resilient. I think that there's been so much work done specifically on the retail side and the brokers, and just all the education that's been around there, and just the accessibility to execution experience. I think it's relatively sticky. I think if you look at just the transactions that are coming in, especially with these shorter dated options, it's just kind of like in essence, it's a disposable product to a certain degree. They're able to have a view, express that viewpoint on a particular day, and then tomorrow they could have a different opinion and reset the button, and that creates churn in the product, and you're seeing just a roll of the product instead of just doing a one-time trade for 3 months and you manage that position and something happens on the last day, and your whole philosophy of the trade could be different. So I think it's all related, and based upon the data that we see, it's continuing strong, although I'm not expecting a 20-30% growth, right? But I think something in the sub 10%, 5% growth, at least for the next 2 years, is kind of how we view the industry at the moment.
So no 15 billion contract month on the docket.
But it could. You could have these. There's no shortage of events out there that could happen, right? When you think about the uncertainty of rates, consumer spending, just corporate earnings, geopolitical things. You have an election.
There is a big
right?
election going on.
So volatility is, implied vol is relatively low, relatively historically, or it's at norms, right? But there is just several catalysts that could emerge, and that could obviously create short-term, increase well above, the ADVs that we see today.
Let's get to the topic that's number one, I know, on your personal poll, which is Flex. This has been a growing area of discussion for us. For a long time, this was very much kind of the hidden corner of the options market. Large institutions would put up these non-standard expiration or contract size trades, depending on whatever specifications they needed. And again, it was kind of limited to a small corner of the options market. But talking to some people at some of the other venues out there, they're pointing out some interesting facts about some of these names. Lighter volume names might have 50% of the OI on the Flex. So the volume out there is growing, and it sounds like you're starting to make inroads over there at Box. So let's start there. Why are you interested in Flex now? And then B, what are you bringing to the table on the Flex side?
Yeah, so obviously we've for years we've been reviewing the space, monitoring the volumes there, and then just looking at our internal resources in terms of specifically on the technology side, right? So we had a window of time to where we kind of rolled after we launched the trading floor. When you think about a trading floor, you think open outcry, but actually behind the scenes, there's just infrastructure within it's really an electronic order. You open outcry of the order, and you're actually submitting an electronic message, right? So our initial launch of the floor, we had a bare bones offering, and we had to add all the bells and whistles. So that occupied our technology resources for 3 or 4 years. So we rolled off of that, and then at the same time, Flex is highly compatible with our floor. So it was just something that it was the right time for us to make the investment and just get our system and our ecosystem, get our system ready to support the Flex symbology. And then from there, we can scale to different order types and add innovation into the space.
Were you seeing a lot of institutional demand for this? Were firms coming to you saying, hey, we want to put up these, non-standard expirations, or was it?
Yeah, we view it as an accessory piece to some of our other business segments, right? So yes, it's come up in several conversations, specifically for some of these defined outcome ETFs. There's definitely some demand there, and we're just excited to enter the space.
You obviously have a lot of active retail listeners as well who traditionally don't play in the Flex market. Never really was designed for them. But as this side of the space is evolving, do you think we'd see a day down the road where Flex becomes, to your point, it's top of our surveys, it's that level of mind share and penetration where your retail could come out and maybe do a 100-lot Flex? It's going to have that level of saturation.
Yeah, I think to get to that point, I think it's interesting, right? Because there's no, electronic order book that's continuously updated for Flex. I mean, most of these models it's either a crossing order or some kind of RFQ, right? So it would be interesting to get those disseminated to the tape. I guess it all depends on what style of Flex. I mean, some of these things might be more exotic in nature to where like the pricing becomes, to get a firm quote out there, available for public display. It's more of an order-driven market at that point, right? I don't think a retail person's gonna, somebody would have to have a specific need.
The pretty savvy customer have to do all the price discovery on their own end.
Figure out, I need this European versus American, and there's a reason why, and like what's the market on it. I think that it's just, we're primarily a quote-driven market out there, and so I think we're a bit of ways away from it being like mainstream retail, but
these days, not much would surprise me anymore about this market, Patrick, especially on the retail side. The evolution of that side of the space has been so rapid and so extreme. So yeah, if you had told me 2 years ago that 0-day would be 50% of SPX, I would have laughed you out of the room. So now maybe 2 years from now,
if you're
going to tell me half of the options market is Flex, I would probably look at you a little bit askance, but nothing is impossible anymore. You mentioned the trading floor too. Let's go back to that for a second, because again, people might say, well, in the year of 2024, trading floors, but they are still hot. They do serve a purpose. Some of our listeners may not even know that Box has a trading floor. So let's start there. Why did you launch a trading floor? And then what kind of volume, what kind of flow, what kind of use case are you seeing for the trading floor in 2024?
Just from an exchange operator business point of view, it was a segment of the market that represented about, at the time, 6 to 8% of the overall market. So just from a business point of view, it made sense to just diversify our business model to have, you have your traditional electronic, and then you have your fixed fees for access fees and cross connects. So it was really just a complement to, diversify the business model, right? So there was a business use case, and of course, there's demand down there for, just the execution experience, the liquidity that's provided, especially for more of these like complex orders in nature, right? So the floor is very unique to where, the liquidity is available and just allows for finer location of liquidity and execution.
Well, we've covered a lot of ground here today, Patrick, but before we roll out of here, if there's any other interesting topics or maybe some interesting developments you have on the radar you want to share with our audience, give them a little bit of a glimpse, a peek at what's coming down the pike from you and the team. We already talked Flex, we talked the trading floor. Anything else interesting up your sleeve over there at Box these days?
Yeah, it's just more or less continuing the innovation and evolution, specifically in our tech side. At the end of the day, we're a tech company. Right, so we're making some significant investments into our, most of your listeners probably don't care about the trading protocols, but we're overhauling, our market data feeds in our core trading protocols. So it's just more, it's more in the need of the market makers and just being able to look forward to making available our system in a high capacity way.
Well, Patrick, thank you for joining us today, taking some time out of your conference, and we'll look forward to seeing how. I'm very curious. We'll have to come up with a fun poll about Flex, and we'll share the results with you, Patrick. We'll see what level of penetration Flex is out there in the broad trading public. But we'll look forward to seeing how Flex and all these other initiatives, how they unfold in the marketplace in the coming months.
Well, thanks for having me, Mark. It's been a pleasure.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.